Hi, Face. Hi, Dan, Zig, all my trading warrior brothers and sisters. How you doing today? Just want to point out what a great call Blaker made. Close pip in both bonds and yen, both related, correlated to each other. Blake was there. Want to encourage everyone to subscribe, take the trial. Those rumor prices will be going up very soon. So if you become a subscriber, you're grandfathered in. Everyone doing okay? So the MEX put in a failing rally here. Dollar was making new highs. US dollar MEX was making lower highs. So that was a pretty good call. Let's say that yesterday we were here in the Dixie, okay? And I even sang it. And I said, I think the Dixie tune will change very soon, probably after the full moon. So here we are. So
I remember you saying that, Dale. That was
see, there's my buddy. I even sang Red Riding Hood to it. So, right, buddy?
That's a great call. Well done.
Thank you for acknowledging it, buddy. So I think it's important. You know, I don't think the uptrend's ended, but we could still work lower. I had some lines that come in around 92.70. I guess they're erased, but here you go. What's this? 92.20. So looking for at least back to 93 on that. Euro Aussie acting okay, trying to put in a reversal week as well. And I would be disappointed if with the weak dollar today, it's kind of the opposite. Everyone's saying how great the gold held up while the dollar was strong. Well, today the dollar is pretty weak and the gold's not making much hay out of it. So we'll see. Still think there's a chance that silver washes out under this low. We'll see. I don't have enough conviction to try it. Speaking of silver, we have David Morgan, who's very well known in the precious metal industry and specializes in silver. So, you know, if you're like Stel, this probably is a great interview for you, Stel. You ever follow Morgan's work?
I have on occasion. I really like it, so I'm definitely going to be listening in.
Yeah, so you know, I haven't talked to David in a long time. That's going to be an interesting interview. And last time I talked to him, he didn't think anything much would happen in 2017, 2018, but 2016, 17, but he was thinking 2018, 2019 was going to be a great time to own silver. So that's about it. That's all I have. Great call by Blake on the notes. In fact, they're good out yesterday because bonds are coming off and yields are going up today. So let's see what we have here. And that's why the S&P is recovering. Yeah, great close. Wasn't that a great out by Blake yesterday? And I saw the Skype. So Blake can even cover positions while he's driving, passing Yuma, Arizona. I don't know, maybe he saw a tumbleweed or something go past his car and said, oh, I better cover my bonds here. Anyway, great cover by Blake. So still, you know, lots of political upheaval still, and I know you want to talk about it, and I think Joe is tweeting something that Mark Chandler called it some type of very unusual market event. I forgot what he called it, but
yeah,
Joe,
it was from what I remember a 15 standard deviation move in Italian bonds, which obviously sold off yesterday quite a lot.
Yeah.
And it's just, you know, it's like a lot of people say, the ECB spent years of negative, you know, zero interest rate policy and QE and trying to keep everything together and keep yields low. But then it's like it's a wound, how do you call it? It's like a spring, which is wound. At some point, it's going to go.
Coiled.
It's coiled, exactly. And I was looking at the graph of the 10-year yield in Italy, and it was going down for years, 3-4 years, whatever it was. And then within 2 days, it went right back up to where it started. So it shows how quickly things can reverse, obviously when there's a reason. And speaking about Italy, just for the people who haven't caught up from the news from yesterday, from last night, it looks like we're going to new elections again. Because there's not much leeway that the five-star movement and the Lega Nord have in terms of who's going to be in the government, etc. So there's going to be a new elections. I read, and I was actually laughing because there was a suggestion by the president, I think, or by somebody, about having elections in July, and the five-star movement leader Di Maio said, "Oh no, this would interfere with the lives of Italians." Obviously, they don't want to do anything during their summer holidays, which is funny. It's I understand that, I'm Greek, so it looks like the way things are going. If we do have elections, new elections, it's probably going to be after the summer, so probably like late August, September. So we have to remember that. So we've got like 2 or 3 months ahead of us of non-resolution and continuous volatility. So just something to keep in mind, that this thing is probably not going to go away anytime soon. So
yeah, but on the other hand, I don't think that the market is going to keep selling off because of that. They're just going to go through a phase now that the market just pushes that back as an event for later on. Stelio, and I do think, yes, that we will have more market jitters when we get closer once again to perhaps deciding a new election date, if that is to happen. For the time being, it seems that they realize that obviously if they wanted to push that, they would then inherit the problems that this whole situation would create immediately after taking over, because the market was obviously not going to treat them well. And as you said, there would be at least like a month and a half needed for them to have elections, form a new government, etc. And who knows what would happen in between with bond yields and
the other side of the coin, though, is that if you look at Greece, when Syriza took over, the markets had already been quite volatile for Greece. Yields were rocketing up, things were not doing well. So this new government, they said, "Oh, look what we took. It's not our fault." So they can always take that line. But I understand what you say, and I agree, in part. But the bottom line is we don't know what's gonna happen, in the next few weeks and months, because it doesn't look like we're going to have a resolution anytime soon.
Yeah, that's true, and that's definitely going to affect the currency and Italian stocks, etc. I mean, it won't permit it to actually, it won't permit it to go much higher, because everybody's going to be, it's a little bit like the Brexit effect that we had. I mean, uncertainty always acts like gravity, right?
Absolutely, yes. So I don't know what to make of it so far. We've had a big reaction yesterday and the day before, so now I'm kind of sitting and waiting to see what the next move is going to be. What the next political development is going to be. But it looks like, as I said yesterday, polls are already showing the five-star movement and the Lega Nord getting nearly 50% of the votes, like 47 or something like that. So that could really change things. So let's see.
By the way, we have a very strong print from German May preliminary harmonized CPI 2.2 year-on-year versus estimated 1.8. Okay, that's also definitely Euro positive.
Yes.
Wow. 0.6 month-on-month versus 0.3 expected. In essence, actually, that's a very, very strong print. I mean, that can definitely help Euro recover even further. Stelio, we also have a situation that there is talk that they will be trying to vote to get a no vote for
no
confidence
vote for Spain.
No confidence vote for Spain, for Rajoy, right?
Yes, that's what I read. I don't know. I really don't know the details, but this is, you know, it's another thing that's it's a destabilizing force. You know, again in the eurozone. I don't know how that's going to pan out. I need to research a little bit of that on how he's how this might go. But yeah, it's
Wow.
it's
You know,
definitely
it seems to be global, guys. I mean, it's happening here in the U.S. When you say Mueller's investigation is somewhat destabilizing, and just, you know, the unprecedented behavior and actions of President Trump. So I guess the only place you're safe is if you're in a dictatorship like Kim Jong-un or President Xi of China. What do you think? Or maybe the mullahs in Iran. So, you know, it's almost like if the people have a chance to, you know, voice their opinion, doesn't seem like too many people are happy with their leader. So we'll have to talk to Blake when he gets back from vacation.
The big difference being that I think that the market, and for good reason, because it's not something easy to achieve, but I think that the market gives very low chance to a possibility of Trump being indicted or somehow removed from office because of the investigation. So I do think that that would also play in a big role if and only if the market actually thought it's a high probability. On the other hand, the big difference is that the chances of Italy, especially after the result we had in the previous elections, and also seeing what kind of polls we get from Italy in case we get another election round, it's more than obvious that the situation in Italy has already gotten destabilized, and we know how big of a problem Italy might end up being. So I think the big difference between the two events is the probability of them happening, right?
Yes.
Yeah.
Yes.
Yeah.
And the other thing, you know, we're talking about governments and all that. There's something I wrote on the chat room like 10 minutes ago, which is, in my opinion, obviously, but I think that the quality of politicians globally over the past decades, every decade, it just keeps getting worse and worse. And it's very worrying. And that's probably one of the main reasons why you get all these vote results, you know, in elections, which are effectively people complaining about the status quo. That's what's happening.
Yeah.
You know, you have far-right parties in every country. Even in Greece, they got 10%, nearly 10%, which is really extreme far-right party. And it's not like these people who vote for them agree with their fundamentals. No, they're trying to complain with about what's happening, and it's worrying me a lot, I must say.
Yeah, after the era of Reagan and Thatcher, politicians indeed have been their value in essence, and their quality has been depreciating greatly year by year, right? I mean, it's more than obvious.
Yes. By the way, we have ADP in a couple of minutes.
Yeah, I know.
Good. Sorry.
And
another revision of US GDP as well.
Very true. So, Dale, I'm going to grab the screen so we can cover the data. Okay, great. So here we are. Stelio, give us the numbers as soon as we have them, because I want to show a couple of things to begin with. First of all, we already see that we're having a big reaction today in the Euro USD and in the vast majority of the Euro pairs. So far, we have like a tweezer bottom here. I'm monitoring this descending channel, but if we go down to the 4-hour chart, you're going to see that we have the same situation happening with the Euro and the inverse situation happening with the DXY, meaning I was monitoring this as a possible descending wedge. We got an overthrow, and now we seem to be getting back to retest the resistance. I think that if we do break out from here, yesterday's move lower is end up being exactly what I said, an overthrow. The opposite situation with the DXY. Dale called it yesterday, that the retest of 95 that we got there, it seems like it was a terminal push, getting last people on board. You see the overthrow here in the ascending wedge in the DXY. Now we're back testing the ascending wedge's support. In my opinion, if we fall below it, that opens the door for a bigger correction, perhaps towards the 92.50, 92.60 area. Yes, Telio, we got numbers.
Yeah, 178K versus 186 expected, so marginally weaker ADP.
Yeah, nothing real market moving. Yeah, here's the USD yen. Let's have a look at it on the 4-hour chart. As you see, yesterday it almost tested our area at 108 that we were looking for. It's now rebounding. Keep in mind that, of course, this rebound is also due to some of the market jitters going away, or at least going on pause. Obviously the biggest beneficiary here is the euro yen. Why? Because the euro yen has benefited both from this situation in Italy looking somewhat better and yen being sold off due to risk reversing somewhat. I also want to show here, and we talked about it in the chat room yesterday at some point, that we also reached an equality target. I mean, this leg, let me mark it, this leg equals this leg lower, right? So in essence, this bear flag played out perfectly, and the exact same thing happened with the pound yen. So the market did achieve the bear flag target, and now it's reversing. Regardless, I still have half of my position. I said that probably I would have closed it yesterday, but I didn't because we yet didn't have any signal about it. But if we do close near the highs today, I'm going to be booking profits both on my euro yen and my euro Aussie. Speaking about the euro Aussie is also showing a descending wedge here. So if we do close above this descending wedge, I'm also going to be booking this one. So in all likelihood, from what I see, I'm going to be taking profits in my 2 euro related positions that I had. Regardless, and going back to the daily, I have to say that yes, every euro pair is due for a rebound. And yesterday, and this is a very important thing I need to stress out here, we got the DSI reading, the daily sentiment index, for those of you that don't know what a DSI is, and we got a reading of 4 for euro USD. This is in a scale from 0 to 100, right? So 4, I think it's a record low. DSI obviously acts as a contrarian indicator. So we got a reading in the DSI that we've never seen before in the euro USD, extremely bearish reading, which is a contrarian indicator. And oppositely, in the DXY, we got a reading of 94. That is not a record high, but regardless, it's a very, very high number. I mean, an extremely bullish sentiment indicator. So in any case, we were discussing this with one of our good members, Olivier, yesterday on the chat room. In any case, everything was showing that the euro, the dollar, they're stretched and they're due for some kind of a recovery. Dale yesterday, had the feeling in advance. I don't know, perhaps his nose after so many years is catching something in the air, but he called it before we even saw the signs.
Yeah.
It is what it is. So I do think that if we get a confirmation today, we should be seeing some bigger pullbacks. Anyhow, 129 remains a very critical level for the euro yen. So even if we get a rebound, I would be very carefully watching for 129 because it can actually provide some resistance. If you look at the daily RSI in the euro yen, you will see that we got a reading below 20. Usually, you do not see the market bottom with such readings. In any case, I would be looking for the move lower to resume after some point. Okay, now a couple of other charts I wanted to show is Aussie and Kiwi. Aussie and Kiwi yesterday, I even sent an intraday update. They were both on the precipice of breaking down. So as you see, Aussie, I was mentioning yesterday how important the 75-cent area was because we had this possible pennant. It was also horizontal support. We were breaking below it, late at night yesterday, and now we're seeing a very nice recovery for it. Kiwi as well. Yesterday we seemed to be about to break lower from this triangle. we completely reversed. So far today, we're seeing a bullish engulfing. So why not? We can go back to the possible scenario we were showing yesterday in the 4-hour chart, that this is an inverted head and shoulders formation, in which case we're going to be moving higher. That's why it's quite important to be monitoring the market. I mean, at least for my trading style, you know, for me, the most critical part is seeing daily closes, because, you know, intraday moves sometimes are simply noise, right? Market noise. And you can easily get trapped in the wrong direction of the market just before the market, reverses and does the complete opposite. Now, one more chart that is of importance here, I was showing it yesterday, I also gave an intraday update about it, is the Bund, because as you see, the Bund obviously had a very stretched move due to the situation in Italy, but not coincidentally, look at the area that provided a rejection once again. It was this long-term descending triangle, this trend line, the confluence with a horizontal resistance level as well. So we got rejected from roughly the 164 area, and so far today we're seeing a very strong move to the downside. In any case, watch 160 for support, but regardless, that keeps us within this descending range, descending triangle. It's almost a channel, actually. The lines are almost parallel, which prevents a very, very bullish breakout from happening. Okay, so this is something I was monitoring very closely yesterday. And another reversal that we're seeing here in the treasuries, we had like 8 consecutive updates in the treasury, something like that, up until today. Today it seems that the market is going to give some of the recent gains back. In any case, I would be looking for 120 to provide support, and I think that we might see a bigger rally following. Now, if we look at the yields, and why I want us to have a look at the yields is because of the area that the yields actually found support. So the yields, we have talked about it, about this potential months ago, that we were seeing a possible inverted head and shoulders formation in the yields. We broke above it, we formed a bull flag, we moved higher, we formed the pennant, we moved higher once again, and suddenly we got this move lower, which found support where? At the neckline of this inverted head and shoulders formation. So the yields also found support at a very interesting technical area. Okay, that's why I'm showing it. So this is another chart that I'm closely monitoring, the yields, and if actually this 275 area is going to hold. Now, let's have a look at crude. Crude was looking like it would break down yesterday at some point. Regardless, it found some bid once again. As I was saying yesterday, that really doesn't change my view of the market, which is, let me go down to the 4-hour chart, which is that, no matter what kind of a form this correction takes, I do think that it will end up being a correction, right? So I don't know if it's going to do something like this. I don't know if it's going to do something like this. I don't know if it's going to do something like this. But as long as we remain below this area here at 129.40, I will be actively looking for one more leg to the downside towards 63. So I believe that this was the first move lower. We should see some kind of a recovery in some form or another, and then I think we're going to see at least one more move to the downside. So I'm telling you in advance that I'm actively looking for opportunities to be short crude. Okay, so let me open the question box and see what you want us to have a look at. I think I already went through several markets. By the way, let me also show the cable. Cable yesterday actually closed below this key area at 133, but it seems to be recovering now. If we actually manage to close back above it, perhaps as the euro, as the DXY, that move will end up being like a false breakdown, and we still might see this recovery I was looking for towards the 136 area. Of course, we need For all of that, we need more confirmation. But I'm telling you in advance that some first signs in combination with the extreme market sentiment that I was talking about that we can monitor through the DSI, those are things that are actually going through my mind at the moment, and that's why I'm carefully monitoring them. And let me also show you the pound yen. Pound yen also seems to have broken falsely below the 38.2. The equality target I was talking before was this one that we hit yesterday. This leg is equal to this leg lower, so perhaps this is a nice spot to recover, to come and retest this broken ascending trend line before moving lower. So this is another candidate for a recovery. As I said, though, I'm monitoring these things, but I want to see a daily close that will actually confirm that something like that is happening. Now, having to do with the risk, the situation is quite mixed. If we look at the S&P, I can tell you that the S&P did move lower yesterday. We had quite a big candle, but it remains above this broken triangle's resistance. So as long as that's the case, I would very, very cautiously be looking higher, but very cautiously, because this is a very choppy range, and anything can happen within this range. I mean, we might end up finding ourselves in a bigger triangle that's something like this. So perhaps that was not the triangle. This might be the triangle, or whatever else. So while you are in a correction, you can never be certain when it's over, right? And we still have an open possibility that we have one more leg missing to the downside. So I think more price action is needed there, but I can tell you two things for sure. That both the DAX, I haven't changed any of the markings I had on the DAX. When we were testing the 78.6, I said that ideally I would want to see a move lower towards 12,900, and even better if we get down to the 38.2, which is also horizontal resistance area that can act as support at the 12,600 area. That would be even a healthier correction lower, and that's exactly what we did. We came down, we tested this second level. I haven't changed any of the drawing since 2 weeks ago or 10 days ago, something like that. And the index seems to be responding from here. On the other hand, if we get rejected from 12,900, I think that this will point to one more leg to the downside before higher. More or less the same situation with the FTSE. As a first area of support, I was indicating this horizontal support resistance area. We did target yesterday. Of course, we're not seeing such an impressive recovery so far. We might have some more downside, perhaps a move towards the 7,430. The 200 DMA is also there. The 50 DMA is also converging there. So until we get there, it's going to be a triple confluence of supports. That's going to be a nice level to be looking for more upside once again. And the Nikkei, for the Nikkei as well, we were looking for a move from the 23,000 area to the 22,000 area. That's exactly what the index did. Now, what happens from here is quite interesting to monitor. If we see some kind of an impulsive move higher from there, I will be looking for a move towards the 24,200 highs once again. So I won't be expecting the 23,000 area to hold for a second time. But it's quite early. These are my thoughts about indexes. So let's give it a little bit of time and see what we're going to be getting from the market. Now, let me see questions, and then let me say a couple of things. First of all, we're going to have Andre today with us because, as you know, Andre is our harmonic specialist, and harmonics is a very nice technical approach, especially to time reversals. Andre has proved it multiple times already in the few months he's been with us. He timed, for example, the high for crude perfectly. That was a perfect pattern in play that he put out there, and I'm pretty sure that he can give us a little bit of a more of an insight what he thinks about the recoveries that seem to be happening today and tomorrow. For the same reason, we're going to have Gregor with us, so he can also have a look at the markets from an Elliott wave perspective. And it's always interesting getting his insight as well. So I'm going to cover a few questions, and then I'm going to pass it to Andre. Questions about the indices, I actually just covered those. Concerning Italy, if the 5 star and the league decide to join together into the amalgamated party, then they would get well over 50%. Yes, exactly. Still just mentioned that. Oh, thank you, Ziggy. ADP in 3 minutes. Yes, we covered that. Metals. Sure. Let's have a look at the metals, and let's have a look at the Euro Swiss as well. Thank you for reminding me about the Euro Swiss, actually. Here is the Euro Swiss. Euro Swiss came down and retested this low. You know, the Euro Swiss has been perfect. I mean, we called this break higher from 109. I said that I really don't see any big resistance up to 120, but 120 is going to be a key level. And you know, you see sometimes how interesting it is. I mean, somebody can say that, you know, this was a technical call, but it was helped by what happened in Italy, but it doesn't really matter, right? Because 120 was a key level. Euro Swiss stalled enough there until actually the pair got enough of a reason to sell off. So that reaction from 120 was amazing. Actually, we came down almost 600 pips. No, actually more than 600 pips if we count today, yesterday's low. And we're trying now to recover from that low. In any case, 117, I think, is now an important resistance. Definitely the move higher is quite strong. I would not be looking for a retest of 120 from right here, right now. Probably I would be looking for an area of resistance to provide some kind of a move lower once again before we can be looking for more upside again. Now, how do you do with gold? Gold is holding within this descending channel, but is making an effort of actually breaking out. This is also another confluence of resistance at 1,300. If we do see dollar weakening from here, obviously that's going to help the metal break back above this confluence of resistances. But would that, you know, turn me outright bullish? Absolutely not, because we've had plenty of false starts. Gold remains in a choppy ascending formation. You can see more clearly how choppy that is if we look at silver, because silver has a more symmetrical formation. You can see it here. I mean, nothing to do with silver. Silver keeps coiling, and at some point it's going to provide some kind of a breakout, but it doesn't seem ready to do so now. Platinum is also toying with the idea of breaking above this descending wedge. I think that technically speaking, it's at a better position to trade it sooner rather than later in comparison to gold and silver. Same goes for palladium. I mean, palladium, I have two possible interpretations, and Grega can give us his insight. I have two possible interpretations about palladium. One of them is that there is one more leg missing to the downside. The other one is that we've already seen the correction, five waves to the downside A, B, 3 waves to the downside C. Perhaps this is a 1, a 2, or a 2 that is in some other form, and then continuing to the upside. So this is the bullish interpretation, but there is still a bearish interpretation as well. For the bearish interpretation, I would be monitoring this ascending channels support. Only if we break below there, I will be looking for the alternative interpretation. In any case, I think I will consider buying it on a breakout above 1,000 once again. So palladium is also in, something I'm monitoring and in my radar. Okay. Yeah, there is a question about Aussie yen and Kiwi yen. Thank you for reminding me. Yes, they are quite interesting as well. Here is the Aussie yen. Aussie yen was looking like it would be breaking down. I showed it yesterday when it was sitting at support, saying that, you know, this is now on a critical support because you see this is a channel. So a break below this channel, given the prior move that was to the downside, would definitely extend lower. But we did find support here, confluence of supports. Actually, it's this ascending channel support, the 50% fib of the larger move higher, and the horizontal support resistance area. So quite an important victory for the bulls holding this level here. And the Kiwi yen actually did break down yesterday. It's now retesting this breakout area as resistance. We need to see if this will end up being a false break to the downside, because if we get rejected once again from here, I think there is a lot more downside. You can see there's actually, and between 76 and like 69, there's literally thin air, right? I mean, there is no real area, strong area of support here. Somebody can even claim that this is a head and shoulders formation. Let me show you. Right? This high was incrementally higher than these ones. So theoretically speaking, this can be viewed as a head and shoulders formation, and it's a huge one if that's the case. So I would refrain from buying it here. I mean, it's still in a very dangerous position, the Kiwi yen. Only if we break above 76 and close above 76, we can be talking about a false break lower. Anyhow, let me fetch Andre here and see what he's looking at. I'm pretty sure he's going to have some good ideas. There you go.
Hello. Hello, Steve.
Hey, Andre. Hey, mate.
Hello, everyone.
Welcome to the company.
How are you?
Good, good. I'm really interested in seeing what you think of the potential, because it's too early. I mean, I'm the guy that always needs confirmation, but of the potential reversals that we're seeing today.
Yeah. So I believe some of those who are following or who are subscribing the service, and those who are following my work, they should be already synced with those reversals, because most of them are were published inside the platform. So, but let me try to refresh in a fast way some of those reversals or eventual ones. So you mentioned before the bonds, and let me try to recover that previous chart here on inside the ForexAnalytix. I believe it is.
Oh, and Andre, I'm still waiting for the 8x10 autographed photo of yourself.
I will try.
All right, thank you, buddy. I don't think it has to go through customs here. Like, okay, thank you, man.
I will try. So this was a published idea from ForexAnalytix, so you can check the results here, and it was a 4 hours time frame chart. It was triggered from below, and we can see the reaction here. And let me try to recover a better picture. So this is a 2 days time frame chart, as Steve mentioned before. The market has respected that trend line, or structured trend line, actually, that came from above, and we are trading now at actually the market has already reversed from there, from the 78% retracement. I was expecting a few points above to fill the pattern, but the market has printed a nice reaction at the 78, at the trend line structure as resistance, as Steve has mentioned. So this was just one of those charts that I'm following, just the price action. This is a 4 hours time frame. The bond yields. I believe we mentioned this last week. This head and shoulder formation, this small head and shoulder formation, and the market has seen it. Curiosities about this chart is this trend line that I'm not sure if it is the same. Steve has mentioned it. Steve, you can validate, but I don't think this is the same trend line. But the idea is the same. So the market has synced into previous short-term resistance, no, and is starting now to bounce from here, retesting the previous one above. Note that in a 4-hour time frame chart, we have also the completion point for that harmonic pattern above. So showing me some actually the trading opportunity is for me is a harmonic, and then we need other confirmations as eventually this edge and shoulder is one of those.
Okay, Andre, so we have this dramatic move in bonds. Would you still have a bias to sell rallies here, or is the pattern complete and you wouldn't?
So this is bonds, euro bonds. I'm not sure if this is
okay,
the right one that you are talking about.
Like yields and T-notes.
US bonds. Okay.
I think they're fairly similar, although I think the US bond market has been stronger with yields dropping faster. But I was just curious if you thought we were completed here, or that one chart you showed looked like we could get a right shoulder back to your trend line.
Need to remember. Let me go back. Anyway. Is this one?
No. But it was another one. It showed the big decline. Okay, that could be it too.
This is the one Steve has mentioned. So this is the left shoulder. We are now reinforcing the previous trend line, the previous resistance, and it can obviously develop into a right shoulder formation here.
Right.
But yes, it can develop into. But it's not printed yet, and I need at least a retest close to the height of the left shoulder. So we need at least 296 is the highs of the left shoulder. Actually, the price is not far.
Right.
There. So, but well, and it's now trading below the previous trend line or ascending trend line as support. So it's now acting as a resistance. So
do you have any targets down by your is that a 200-day moving average? A blue line down there?
Exactly. It can happen. And let me just try to extend.
Because the 263 was a real important area for a breakout to the upside. We had like a double top flat line at 263, so your 200 comes in right around there. 260.
You are talking about 263, this level.
Yeah.
The 224 extension. So it can print another reversal pattern, and it will depend on. And it's interesting why you refer that price. It will depend on the conditions between this bottom and the bottom created downside. So let's say if the market prints me bullish divergence, it can confirm, and it will depend on other conditions. Also, I use RSI, as you know, and MACD to check for those conditions. But it can print me something like this, and obviously that 224 extension is just one specific price. We have a lot of examples that I can show you, and people can for those who are thinking, you can subscribe for $1 for the next 10 days, and you can explore all those charts. You can see a lot of those harmonics nailing specific prices. Obviously, I don't search for those specific prices, but if I need an entry, I need a price. So why not to follow those specific levels?
Andre, we had a pretty big day in euro and the dollar today. I'm wondering if you're showing any pattern completions around yesterday's high in the dollar and low in the euro.
We have we have actually two patterns printed. One on inside Dixie, obviously, and the mirror euro versus dollar. Both are trading on similar conditions. This is a very, very interesting chart. This is a chart that we are following from this edge and shoulder formation. with this crab pattern printed at 161.8 below. So this was my trigger for bullish momentum. Double bottom. Let me try to clear these harmonics because it's not clear. We have a double bottom, broken neck, 61.8 retracement, the 26.18 setup. The market has printed a reversal, heads and shoulders, and it's trading above. Above 224 extension, we have the bearish sharp pattern below the previous structure highs. The market has failed to hold there. Actually, the market has nailed the 224 extension, but it has failed to achieve targets, the minimum requirements at least. It failed, and then the 224 extension from the bottom to the neck. So usually the 2618 will print an ABCD pattern that can extend above the 224 extension from the bottom to the neck zone. So we extend the bottom to the neck above, and we search for the 224 extension also. At that level, we have this bearish bat pattern printed, but we have this ascending structure here that we need to break and to violate in order at least to increase the probabilities for the markets to react lower, because we are trading above those Fibonacci levels, those specific criteria. So let's say the market has already violated that specific criteria to remain below the 88% retracement. So we need to take that into consideration. That is a sign that sometimes they need to print a new high eventually, no? So, but the market has actually, the pattern is printed. There are bearish, nice bearish divergence also in place. The momentum is also trying to show us something. We have also not so clear. We have no bearish divergence on MACD. MACD is not showing us some bearish divergence at this point, but it's starting to show to print some dark green bars, trying to show us some.
Okay, if we took out that wedge line, what would be the target?
I believe the 38% retracement.
Where does that come in? 2.5?
92.40. Eventually, yeah, eventually a few points lower. 200 media average can be interesting. Can be actually an interesting level. One of those situations where the market is searching for those specific patterns. Let me try to push these. Okay. Before you sing something for me, let me just push this chart. This is just one example, and after this one, more will come. But note this is a pattern from CAD versus yen. This is the daily time frame chart, and look what I have saying here. What I was saying here. Bearish shark pattern, bearish shark at 224 at confluence with the 61.8 fib and the 200 media average. So this was a chart published at May 2nd May. Now we have the data here, the date, and look what the market has done here. The market has searched for the 200 media average, printed the shark pattern at 224 extension at confluence zone with the 61.8, and it's now trading at the second target. So the market has synced immediately into the 61.8 index. It is now starting to push from here, and note that we are retesting this previous structure resistance. Eventually it can act as the next the support here from here, and we can see the development of a bullish momentum here. The same we have on dollar, we have on euro versus USD. Obviously the market has extended a few points already below the 88% retracement, very similar as on ICSI. a new low below the previous support, threatening my stops. And I'm just surviving this position in particular because I've made 10 pips adjustments on my stop loss, because other way I was kicked out from this market. The same it has happened to me on cable this week. The market has extended a few points below my criteria and kicked me out from the pattern. But at this moment, I'm not so sure if cable will be capable to find a support at those levels. At this point, it has violated all my criteria, and at this moment I have a huge range to hold and to wait for the development of eventual harmonics in a lower time frame inside that range. Yeah.
Selfishly, I know, EG hasn't done anything for a long time, but I liked yesterday's action, today's follow through. Do you have anything in Euro Pound? Since you're not confident the pound has the same type of rally potential as Euro?
Nothing specifically. I need to wait for one eventual bullish pattern at 0.8644. This is the next pattern, and it's a pattern that needs other criteria or needs other conditions. I need the pattern to be printed at oversold conditions, and I need to find some type of divergence there. So
I'm just impressed that Euro Pound hasn't made new lows with all the Euro weakness we've had. So
yeah, it's holding nice, and it's now trading at the 6.8. It can develop kind of, it's a strange one, but it can develop kind of reversal head and shoulder, but not so linear.
That's the only potential harmonic you see there, though.
At this, in order to keep above this structure, no. In order to, I always take in consideration the structure the market needs to violate in order to print me something here. Like what I mean is, I know if the market violate these highs and these lows, this support and this resistance, that the patterns will change. At this moment, and based on the most recent price action on a daily time frame, I can expect this range between the 78 and the 88% retracement. We have also a potential cipher pattern here, and it's also interesting because it's a perfect cipher. I have already measured those Fibonacci sequences, and if the market sinks into the 78% retracement, it will complete the bullish cipher pattern, but the bullish pattern also below at 88% retracement. So between that range is my kill zone, let's say, my engagement zone, where I will start to search for. I have a lot of things to show you, and we have I believe no time.
No, you have time. You have time.
Not a lot of things to show you, but just a few more. This is a weekly Euro versus Aussie. I still believe this is a weekly time frame chart. I still believe, and it has been shared at the completion point. So for those who are following and or at least thinking, okay, how can I trade those harmonics? You can subscribe to the service, and you can see the market has reached the 224 extension, 78% retracement, nice confluence there. The price has started to range there, and we are now trading, I'm not sure how many, 754 pips or 54 points below. So those are huge patterns that requires, let's say, a very friendly risk to engage. So if the market trades above, we know the pattern will fail. So we don't need to remain inside those markets. But again, it's just another example on how, and from here, just another example, and from here I expect the reinforcement of these previous support. At some point, the market needs to create some pressure here, previous structural resistance. I believe the market will find some support there. There's a bad pattern here at 88% retracement from the very last swing, the swing that creates the new high, 88% retracement. There's a potential or eventual bad pattern reinforcing the support, neck zone, right shoulder formation, retesting the highs of the left shoulder as my limit, something between the 61% retracement from the neck, and the neck is not forged yet, so we need to wait for the neck to be printed and to adjust these Fibonacci levels below, so at the lows of the next support. And from here I expect some reaction. Ultimately I expect a 50% retracement here and a symmetrical ABCD pattern, something like this, an ABCD pattern will put the price around that zone. This is Euro versus Aussie, and I'm just following this one on a weekly time frame. I need to wait for the development of that chart, of that price action. CAD, we had Blake last week, and I believe this week also. And I believe it's a common sense. It's kind of choppy. It's not very clear. And in terms of harmonic patterns, in terms of advanced pattern formations, I need to wait to see if the market prints me those ones. So this is the bearish butterfly pattern. It needs to fill the 127 extension. Eventually, it will retest the very highs of the previous structure, or trend a few points above. Above, we have also another harmonic above at 132. So there are a lot of things happening at this moment. Dollar versus NOK is also one of those charts published inside the ForexAnalytix. We have here this chart from below. You can go there, you can check this chart. This is a potential bad pattern, so I was expecting the market at 1.33, the 88% retracement. This is a reversal edge and shoulder formation. From here, the 61.8 retracement from this swing, 61.8 and an impulse above to searching for the 88% retracement at 8.33. Let's check what the market has done. 61.8 support, trigger, and next impulse searching for the 88% retracement at 8.33. I believe
that looks amazing, Andre. That looks really amazing.
It's when we start to search for those specific patterns, we need a specific price, and a specific Fibonacci level. So and those patterns will only complete at those specific prices. But obviously, we need to consider that we search for a specific zone. The market is not testing that price specifically. So eventually, the market can develop into other structures, and we need to understand those. So we need the development of I don't know, a triangle, or flag, or a wedge, and well, the market can develop into a different type of structure. But the ones that I like to trade, obviously, and I believe this is common sense, is the touch and run, touch, trigger, and achieve targets very, very fast. But sometimes the market will not print those fast patterns. Obviously, we need to take that into consideration. But we have a few patterns that I have the pleasure to share among the community that works exactly like that. It will search for a specific price, and it triggers. But Again, I never know the result of the pattern. I never know if they will push it into targets. I just know the pattern gets completed there, and I know if there's conditions to engage the market, I will engage. Above all, a risk management situation. If I can manage my risk without the need of huge adjustments on my position sizing, so I can try and engage on those situations. This was not. Yeah, I believe we have an interview today.
Yeah, we do. I just wanted to say something else. You know, I'm bearish dollar Norway. I've got a pip and a position as well on that. If I had, but this was 3 weeks ago. If I had seen that chart, I would have waited for a better entry. But I really like it.
Yeah, it's there from May 23. Yeah, but because the market at that point still it has developed this head and shoulder, and until there, note that during this process, this bullish momentum, I have nothing to say to you. The market can reverse at any moment. We are trading 200 media average as you engage the markets. I believe close to this media. Actually, you have engaged a few points below, no?
Yeah, I did. Yeah.
So I will not be surprised to see this. I will not be surprised to see this daily bad pattern. Usually they can produce an interesting reversal. I will not be surprised to see, and let me be bold and let's, I don't know, eventually a new low below the previous structure lows. Who knows?
That would be lovely, I must say.
Yeah, it can be interesting. Well, but first things first, the targets, risk management, and targets. So and position management until there. If the market needs to go there, we will follow one of those examples. And to finish, one of those examples is one of those pips that I pushed recently is. It was dollar versus yen. We have also nailed the short above, and as I was mentioning, telling Blake, I was expecting the market to find some support above this previous support, to forge one eventual next zone, right shoulder, but the market is already trading below. So. And very close to the 50% retracement. So this is the default target by manuals for the shark pattern. So we are trading a shark pattern. I'm holding this position with one last third of my initial position size. Well, I divide my position in three. So I'm holding my last third. Is that correct, Steve? Yes. Still. Yeah, and I'm just holding that position, and as soon as the market violates this 50% retracement and starts to trade below, I will adjust my stop loss below, and I will start to trail. If the market needs to print me more 200 pips, I will follow. Eventually, I will follow with my dynamic stops. And as I said, one step after another. First, identify the pattern. Second, measure the targets in order to position your risk limits and to adjust your risk limits and position sizing. And then it's position management. So 38, 50%, and 61.8. So in that said, welcome all of you, and thank you.
Okay, great. We got David Morgan.
Yes.
Dale, are you here?
Okay.
I'm here still.
David, thank you very much.
Thank you, Dale.
David's off to get a cup of coffee, so he'll be back in a minute. I just want to show everyone David's website before he gets here. So I'll take over the presenter for a minute while David's getting ready. So if you're a believer in silver, guys, here's the guy. So the Morgan Report, David's been on every possible financial network in his career. It's got a nice video here of the 4 horsemen. Just let me know when you're ready, David, and I will pass the ball to you.
And maybe at this point, it's probably just worth mentioning once more that these webinars are possible because of ForexAnalytix, who are anything you need to know about brokers, and they'll help you out. We have a page on our website which will link you to them, and then we've got an email and a Skype contact. So if you have any questions about your brokers or what you want to do or what you like, you don't like, Trent is there to help anybody who needs anything really. So yeah.
Okay, a big thing for people in the U.S. is the first in, first out rule here in the United States. I know a lot of traders that set up an account with some overseas brokers. You have to be very careful with them to accept Americans, U.S. citizens. So if there's anyone to talk to about, safety of your funds so you don't end up at a bucket shop, Trent Hoare is definitely the guy to talk to. And David's back with us now. So I'm showing David's website, and I'm now going to pass him the ball and look forward to speaking to you, David, and seeing what you have, seeing your stuff. So there'll be tabs there. Okay, I see your screen. Waiting to hear your voice, David.
Okay, my voice is here. So what screen are you seeing?
I'm seeing your desktop.
All right, so let's do that. Okay.
All right.
Give me an introduction or just let me rip?
Sure, I did, David. I showed your website while you were getting some coffee, and said if you want to know about precious metals and silver, that you're the guy. You've been on every financial media, whether it's print or television, and all kinds of conferences. When people think about silver, they think about David Morgan. In fact, I'd like to open it with this question, David. I know that President Trump would love to have a peace deal with North Korea so that he could be a candidate for the Nobel Peace Prize. I'm just wondering how humbled you felt when they named the Morgan silver dollar after you.
Yeah, right. Very.
How was that moment for you, buddy?
Yeah, that was pretty good. Thank you.
Who was it named after? J.P. Morgan?
J.P. Morgan, yeah. I think I'd have to look.
So your great grandfather, same thing, right?
Something like that. Anyway, well, thank you for inviting me on. First of all, I am heavily associated with the precious metals, and I don't want to dissuade that in any way, shape, or form. However, I want to at the very beginning make it clear that what we do mostly is in the equity markets, some in the futures markets and options and ETFs. And of course, there's a lot of ETFs like double and triple the indexes at times. So we do all of that, and we sort throughout the entire resource sector. So even though the original website was called silverinvestor.com, I rebranded about 3 years ago to the Morgan Report. And the letter has always been called the Morgan Report, or actually that's not quite true. I think the first year I called it Silver Investor, and then the second year on, so for 19 years it's been called the Morgan Report. And the reason it's the Morgan Report is because we look at copper, we look at all the minerals, we look at everything. We were first in rare earth elements. And Dale, when you brought up the idea of North Korea, the first thing that came to my mind is an open secret that hardly anyone knows, which is that North Korea has an extremely rich rare earth elements base. Okay. So there is a lot of natural resource wealth in North Korea that very few people are aware of. And if this peace situation takes place, and I think it will actually, and I'm certainly hoping that it does, we may see more capitalism come into North Korea, and it's Korea instead of North and South Korea. And as most of us know, South Korea is quite industrious. So there is a possibility and a potential there for the rare earth element space to get a boost from the mineral wealth in that sector from North Korea.
More than that, the country, which has been in dire poverty, and that's why they always have to blackmail a world with weapons, is to get concessions. But if they just developed what they already have that hasn't been exploited, you're saying it could be a very wealthy nation. And I think that's what President Trump was saying without mentioning all the natural resources there.
Right. You're a sharp cookie, Dale. Well,
okay. So let me ask you this on the Morgan report. So you're covering all different kinds of instruments now. Do you do that through subscribers? You inform your subscribers of potential ideas? Okay.
Subscribers only. I mean, I have two letters, so anyone that's on this call, you know, get on our free report. And I do some advertising on that. And, you know, Dale, I don't know you really well, but look, it's not a sin to make money. I mean, everyone's got to feed their family, etc. And I monetized my free list years ago with the lawyers, made sure that I could do what I'm doing, which is I have a paid membership only site, which shows you a look over my shoulder, which is basically some of the charts I'm going to show today. Okay. And then I have a free list, which does some advertising, occasionally mining companies, sometimes coin dealers. And usually on the weekends, I always provide a free update over the whole financial spectrum, ending with the precious metals. So if you are, I don't want anything except the facts, ma'am, type of person, then disregard what I send out during the week and listen to the weekly update on the weekends, which takes all the interviews that I do that are allowed to go to the public domain, and you get that, which is, you know, from my perspective, fairly valuable. So the inside reports are for active investors and traders. I do both, not many can. And we have top tier, mid tier, and speculative situations for equity investors. And then it's a look over my shoulder. Since I'm not registered with the CFTC, I show you what I am doing and how I'm setting it up. And I don't give specifics like I'm going to enter at 310, blah, 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 blah. I'll use a chart and I'll say, if silver breaks above this point on the basis spot market, I will go long. And that's how I do.
Okay, you know, I recall we were talking about a different matter maybe 2 years ago, David, after I'd interviewed you on FX Street. And I remember you telling me that you weren't expecting much to happen in 2016 and 17, but expected things to begin to heat up in 2018, 2019. Am I recalling that conversation correctly?
Yes, you are, and you know, it's a few that's going to give me accolades. Certainly, I have. Well, you know, no one is loved by everybody, and I.
No, you can't please all the people all the time, buddy.
No, but I've been more accurate probably than almost anybody in the industry, and certainly I've been wrong. I've picked every top in the silver market all the way up, and that's a fact. Bottoms, I've not been as well. I picked. There was an 1817 print. I forget how many years ago, Dale, you may remember. I got a pretty good memory. And that was the low. I called the low. It was a spike low, typical silver pattern, just fit to a T. And I was right for 14 months. That was the low. But month 15, it broke below 1817. So I was wrong in the longer term.
Okay, so you have copper up here.
Yeah.
What are you, I mean, obviously.
Let me get going. Sorry to interrupt. So I'm just going to kind of go. This is sort of what you get on the inside track if you're a premium member, which is, we have two memberships. Premium, which is everybody. I don't have the basic service anymore. I stopped it. And then I've got a mastermind, which is for fund managers and accredited investors, because we do occasionally financing opportunities where you get to buy stocks at a discount and you're an insider, and you have a restriction from the SEC to hold that stock because you bought it at a discount for usually 6 months, and you usually get warrants with it. So moving on, getting off what my service is. So copper, Dr. Copper, it's called. I like to look at things long term, and then I zero in on it. So obviously this chart goes back years, excuse me. And what we can see here is we got a top about 330 and a congestion area right around the 50-day and the 200-day moving average. So it's called Dr. Copper because it shows us usually very accurately what the overall trends in the world or global economy is. And if you've got strong copper prices, that shows the industrial side of the world economy is robust. And if you have, a falling copper price, you have indications that the world economy is slowing down. Is it 100% accurate? No, but it's very accurate. So now,
it wasn't, David. Your chart's an example because I was turning bearish on equities during the decline in copper because I was taught all bull markets are roofed in copper, and that was one heck of a roof that never caved in. So yeah. You're right. Sometimes the correlations work till they stop.
Exactly. So I think this is kind of a fun one to start with, and this is my own personal, stock trade account, stock charts account. Excuse me. And so this is kind of the order that I usually present these in. Regardless of that, this to me, and Dale, welcome your comment. It's at a juncture of like it doesn't know which way to go. We're basically in an area here where we're at the two major trend lines, and I use the 50 and 200 from stock charts because those are the fundamental ones that everybody else uses. So when I do my own work, I'll change this, but for talking purposes, it's very good to start with. So it's at a juncture of I'm not sure which way the economy is going to go, which is pretty close to where we are today with the Italian banks having problems. And, what's the Eurozone really going to do? So I think it's a very good sign, or that's how I'm interpreting it right now. It's like, which way could it go? I'm saying I'm favoring down, not that I want to go down. I try to be objective about all financial matters. I can't. I'm biased to honest money and an honest financial system. In fact, that's my mandate. But the point I'm making is that we see this chart in an indecision pattern, I would call it. And the indecision pattern is, you could say, between 305 and 310, just generally purposes. So what I do, the way I trade, Dale, for everybody here, I'm not going to change the chart and draw it in front of you. You guys are all very smart. Is I'll make a arbitrary point like 312, let's say. And I don't know where we are today, so I'm going to presume where are we today? 306. So I'd make a 311, excuse me, a 311, and let's say a 304. So if we got a move in copper above basis spot above 311 and it closed above 311 3 days in a row, I'd go long. If we're at 304 or 303 and it closed below 303 3 days in a row, I'd go short. Now,
why 3 days, David? Why did you choose 3?
Because
I'm big on 3. It's a number of completion.
Well, I'm a position trader, Dale. So when I made the most money trading silver, it was when the channel was around 19. This is going into 2011. I think it was 2010. I'd have to look back. And I said, once silver breaks above 19, stays 3 days in a row, go long. So I went long at 19 and got all the way to 26. Pretty nice trade, especially if you got a couple on. And at 26, it started to balk out, and I didn't like the pattern. So I put a stop in, and then I got anxious and I got out around 26. And then they announced, the Federal Reserve announced QE2. I got right back in, so I got in and out at 26. I might have had some.
Okay. But why 3 days instead of 2?
Just experience, 40 years in this market, losing a lot of money when I started trading, making a lot of money after I calmed down and said the market knows more than me. Okay. And so that extra day is proven prescient at times, doesn't always work. I'm a little more aggressive on the downside. Usually the downside, if it's a couple days, I'll short. On the upside, the 3 days that saved me, I just went 17 was my mark. Silver closed 3 days in a row above 17. So on the morning of the fourth day, I would have gone long, and it dropped precipitously. So I did an update like this for my members and said, 3 day rule works most of the time, not every time when I'm not entering the market.
Okay.
So,
understand.
Yep.
Okay. So that, that way you feel more certain about confirmation, and it doesn't bother you if the move is already underway and you have to short it a little bit into the hole or reach for it on a breakout to the upside.
Exactly. Now, this is because that's my personality. That's what I'm comfortable with. So when I rode that market from 19 to 48, and I got out at 48, that's a nice move. Now, if you were day trading, you didn't get right in and, so I've learned to trade where I'm comfortable. And yeah, I always let the market tell me. This is a big feature of me or the Morgan Report. And I'm not the only one that trades this way. I'm not trying to make it all about me, but I am trying to explain that you have to really be self-knowledgeable if you're going to be a successful trader. And you have to be able to admit you're wrong and promptly admit you're wrong and move on. The biggest mistake I made in my youth was not admitting I was wrong. It's like, wow, fundamentally this and fundamentally that. Forget that. The market says different than you. Admit it and move on. And I like the position trade because for me, if I can get a trade that works for weeks or months, you're going to take a big score. And moving on to that just a little bit longer, Dale, I haven't read a lot about trading in a while. I still learn stuff. I'm not saying I know everything, but I've gotten comfortable with how I do it. But one guy, I remember, forget his name or I give it, that was failing, was a professional, and he was trading, and he had a really bad year or two. So he took a year off and studied everything he could. So he came back into the silver market, and he took out the middle, and he got into silver at something. I'm giving you the idea. I forget the exact entry and exit, but he got in at like 16, and he got out at 35, and he was only in the market for like a week. But what he learned was the trend is your friend, which we all know, and he used it to his advantage. So he didn't get in at 750 when it broke out, and he didn't get the 50 high. He just took a nice chunk from like 15 to 30 or 35 and walked away and finished. He said it to his wife, I'm out. She goes, oh, wow, he made a good, how'd we do? Oh, no, we're out. We are done. I am finished. You are finished. We are retired. So this can happen, and I'm not saying trade futures to retire. I'm not saying that. What I am saying is that even pros can learn something or reevaluate markets, and taking out the middle isn't a bad way if that's your personality. So anyway, I'd probably overemphasize.
Yeah, don't try and retire on one trade is what I think, David.
Yeah.
You know what I mean? It's baseball season, right, bro? So you know the biggest home run hitters, they're also the biggest strikeout kings.
Absolutely.
And the difference between baseball and trading is one strike, you're out, and that means you're out of money, and you don't get up to bat again.
Right. No, I'm not. Thank you for that, and I probably should take that back and let me take it back.
I'll edit it. I'll have our editor edit that from the interview. Just kidding. But I know you're right. It only does take one. And trading less is better than trading more, in my opinion, unless you
another big lesson for me, huge lesson for me.
Yeah.
I probably trade 3 times a year. And people, what? Because I invest, I do other things. First of all, I'm not at my desk that often. I'm traveling around the world all the time, and I hate having positions on when I'm traveling. It's just a pain because even if you got stops in, it could be jumped, or it's just it's a pain. Anyway.
So where are you at on silver now, David? Why don't we just swing to it?
Let's go to gold real quick.
Okay, let's do it.
Here's gold. So we've broken under the 50-day moving average. Not a good sign. We've tested down to 1280. We're back at 1300. If you look at it from this perspective, it's just nasty. So I am going to change the chart on this. I'm going to go to 0 years, and let's just look at the last 5 months and update this chart real quick. And, we're down in here. We're seeing some pretty big volume on a down day, fairly well under the 50-day. I don't like it here. I think we got some more consolidations to do. I'm not going to be real happy in gold until we get above 1350, right in here. And the reason being is you can see how much congestion or overhead resistance there is up here. And once we break free and it's, 1350, you could say 1357, I don't care, it's the idea. You got to get above all of this congestion. Once we do that, then we're probably going to shoot to about 1450. And that's confirmation to me that we're back in the bull market.
Okay, like it. So any downside targets possible? So you're only going to buy strength. You're not going to try and buy value?
Well, the problem I've got is being a metals head and being, long only, and I'm not, because I do hedge, and I don't call it selling short because, all the trolls out there will, Morgan's out, because there's so many undereducated, uninformed, ignorant people that have very big opinions. Anyway, no, I would, for gold, I'd say, if we get down into it's not on this chart, but we get down into like the 1270 area, probably I'd probably have to put a hedge on. I mean, it's just not, I don't think we're in any big problem. I mean, if we go back and change this to, let's say 2 years and 5 months, we can see we're still in an uptrend. So I called the bottom here. This is my third call at the bottom, Dale. So it took me 3 tries to get it right. And there's that number 3 again. But there's the low, higher low, higher low, higher low, which is what? An uptrend. I mean, look, this is not me being bullish. This is the market telling me it's bullish, okay? So until we broke, say, 1240, I wouldn't get too worried. If we broke 1210, I'd really get worried. And of course, we broke 1130, then I don't know what's going on. I guess my worldview is incorrect. So that's where we're at.
I'm looking for about 1180. All right, so let's take a look at silver.
Yep.
And I do have a question, David. You know, this silver gold ratio has been out of whack. You know, it hasn't regressed to the mean in a long time. You have a view on the silver gold ratio? Because the silver shares, and I know you watch them, up until recently have been holding up much better than the gold shares or the juniors on both sides. Silver shares acting better than gold shares.
Absolutely. And bring me in if I lose that question. So I want to say a couple things first. It has to do with your question. So let's look at the HUI. Equities usually lead in a bull market. They're not leading. They're still in that kind of indecision pattern, I call it, underneath the 200-day, right, kind of at the 50-day. It's kind of a down looking thing. Don't like it. Silver, similar to copper, sorry, similar to copper. We're at that kind of in-between point. I mean, you can make a equilateral triangle this way. You can make a bull flag this way. There's lots of ways to look at this chart. But let me get to the ratio, which I think I have in here. There's a gold platinum ratio. There's your gold silver ratio. So let's look at this from a different perspective. Let's annotate this a little bit, and let's look at this for 1 year and see what that looks like.
And how do you execute a gold silver ratio trade either way in the market? In there, because you have 100-ounce gold contracts and 1,000 and 5,000 ounce silver contracts. I don't even know how to execute the trade if I wanted to do it.
Well, that's a very good question. There actually is, and I don't know the similar. I give it to everybody on the call, but there is a gold silver ratio trade on the
an ETF.
It may be an ETF. I think it may be a futures contract, but there is one or the other. Yeah, they put that on a couple of years ago. I wrote about it in my newsletter, but very few people are aware of it. And if it's a big trade like this one is, I will do it physically. I mean, if I've got a roll of eagles or something, gold eagles, I could swap those for silver when the ratio is above 80. Right. And swap it back when it gets down to say 35. So this is 1 year. It's been as high as you can see here, 83, you could say. Yeah. I'd say 81, but those are true prints. It's just, momentarily, probably intraday. Anyhow, the point being above 80 is like ridiculous. So it's a good time to make that trade. And I love spreads. Spreads are less margin and easier for me. And that's me. I mean, some people out there may hate them. I don't know. Yeah. So that's that. We're, right here. We were right here, but wasn't favorable. You see it's red print. Now we're back up testing 80 again. So first of all,
40 is kind of like the mean, isn't it?
Yes.
Longer term, if you had like a weekly chart up there, 40 is kind of where it should be.
Yep.
Where it could go.
Correct. Okay. Yeah. So anytime you get in that 40 range, it's a good time to swap back. So if you swapped your gold for silver at 80, you swap it back from silver to gold at 40. And if you do that a couple, 3 times during a major bull market, you'll come out with a lot more metal. And I have done it. There's no such thing as 1.5 times. I did it in a kind of a schoolboy fashion, not a very big move once, and a rather substantial move one other time, this bull market. So getting to your question, first of all, and I can't answer why, Dale, so I'll have to use this analogy. It's just like Coke and Pepsi. Why does Coke have a higher multiple than Pepsi does? One's in a red can, one's in a blue can. They're both, dark colored sugar water, okay? Silver and gold aren't the same element, so it's not as good as the Coke Pepsi analogy I just gave. However, they're both precious metals, but they have different uses. Nonetheless, silver always sells at a higher premium than gold does. And then at the end of the market, a good, solid gold company like Pan American Silver or First Majestic that actually mines the metal in a substantial manner will sell in the last bull market. I don't know what this one's going to do, at a multiple of about 35 times earnings. But a good silver company, excuse me, I just said silver company. A good silver company will sell at a multiple of like 50 times earnings, whereas a good coal company like Newmont or Goldcorp will sell at 35 times earnings. So there's
where are they now, David? They after this bear run, what's the average multiple on gold and silver stocks now?
It's nothing near that, and most of them you can't even do PE because they're inconsequential, and that's most of the thing that anyone knows about the stock market and trading stocks and equities. Believe me, I have gone to school and I've done everything that you can do, and I'm exaggerating slightly, but I was taught from the beginning from Bill O'Neill of Investors Business Daily. I took his classes. I've gone all options classes, all this stuff. The point is, I know equity analysis, and it doesn't work in the gold stocks. So everything that you know about equity analysis applying the gold stocks, throw it out the window. And of course, I had to learn that by reading, rereading, and understanding, and looking and applying. And it's very difficult.
Maybe that's why people bet on the jockey management.
Yep. Yeah. Equity analysis, standard equity analysis on precious metal stocks only works at the end, which is what I just told you. When you look at a major company selling at those multiples at the end, when you can get a PE on these stocks, that's a good indicator that that's it.
It's over.
That's what I'll be doing for my members, right? And the hardest thing I've gotten, sorry to make this about me too much, but I get excited. I've been on your show in a long time and I appreciate it, is that when I call the top, I think, there will be loyal members that have been with me 10 years, 15 years that will want to absolutely nail me to the wall. Because the hardest thing to do when you have a emotional commitment to a market, which none of us should have, is to say, get out. Because the metals are almost a religious experience for a lot of people. And they aren't for me anymore. When I was in 20 to 30, it probably was, but not anymore. So when that day comes and I call the top, they'll be called, an Illuminati, a trader, but I don't care. Because my importance here is to make money for the people that follow my work. It's that simple.
Well, I'll tell you what, David, you've illuminated a few things for me today. So really appreciate you being here. If you want to show your website, that's a good time to do it now, and how people could reach you, get a hold of you. It's Stock Guru, @StockGuru with a number for your Twitter handle. What's the number? At Silver Guru.
My Twitter handle is Silver Guru, no number.
No number. Okay.
No. Silver Guru is my Twitter handle. You can ask me. So I think a couple things. I'll try to be brief. I know I got the next guest. So here's the main site. If you just go over here and give me a name and an email address, you'll get a responder that says, yeah, it's me. You'll get on our free list. That's the best thing to do. The other thing to do is this blog. So right there, blog and podcast, hit the blog. And they're like this. So here's one here, and this could take another minute. Does your pension fund have enough gold? This was an extremely important video. It cost me money. I had to hire the crew. It's all on me. It's for free for you. But watch this interview of why gold is important for portfolio balance. And I know you got another guest, so I'll sign off and thank you.
We're done after this.
Oh, okay.
I would suggest a different host next time, like me. Anyway, David, thank you so much for being here today, and I really encourage people that have an interest in this area and these instruments to take a look at what David has to offer. He's definitely a pro and an expert in this arena and has the experience. David, you can't learn experience, can you? It only happens with the passing of time and living through stuff.
Amen, brother. And I'll just add on to that. I'm going to have my cup of coffee, as you know. But people ask me, I turned 65 in January, and, I get the occasional, well, don't you wish you could be younger? Or wouldn't you like to, And I say, heck no. I paid the price to get here, and I'm not going backwards. I've got the maturity, the wisdom, and, of course, the aches and pains. But I look at them as badges of honor in a way. I don't want to go back and repeat those mistakes. Not that I don't make any now, but I've just got a much more settled attitude toward the markets, toward life in general. I'm looking at how I can help others, and always have had that attitude for years. But I enjoy being where I'm at, and I earned it. You know, as you said, you know, you
Yeah.
can't unerase experience, and I've learned that I was stubborn in my youth, and I knew too much in my youth.
Yeah,
And I
ego.
learned-
We
yeah.
had an ego. We were edging God out, EGO. And you know what, David? You
Yep.
know what, David? We have something else in common. We're the same age. I just turned your age, and I'll see you in the Medicare line.
Okay, sounds good.
Had a great time hanging out with you. You know, the best combination is to have fun and offer compelling content, and mission accomplished, my trading warrior brother.
Well, thank you so much. It was a real pleasure on my part as well.
Thank you, David. David
welcome.
Morgan, everybody. Thank David, and that's a wrap. See everyone for investing.com Thursday tomorrow. And most of all, like David and I believe now, after going through all our trials and tribulations, don't just count your pips, count your blessings. And I'll see everyone tomorrow. Adios. Thanks again, David Morgan.